Hi, welcome to this video day, which is on March 17th. It's Saturday. We're going to be looking at two high odds trade setups in our view. Euro USD, Euro JPY. We looked at them in a video just over a week ago. And in terms of the trades at the moment, Euro USD up just under 100 pips and Euro JPY slightly more, well over 100 pips. But in the coming week, we're looking for the Euro to break down and our profits, hopefully, to increase. We think the euro is on the verge of a major breakdown. I'll explain my logic in a moment when we go to the charts. Now, just for new viewers, we are going to be using a very simple technical analysis, but what we're going to be doing is basically finding out what the key players are doing in the markets, the people who really drive prices. Now, in terms of doing this, we're going to use our favourite tool in Forex trading, COT, Net Traders Positions. If you don't know about them, you can join our mailing list on the link beneath this video, and we'll send you more details. Just want to watch the video through right now. Just keep in mind, what we want to do is always trade with the smart money commercial hedgers with their positions diverge away from the speculators. Now, when we go to the charts, it's my view as of right now. It can, of course, change in line with the market conditions. If you want our daily technical analysis of these two pairs and 10 other major pairs, all our techniques and COT analysis, you can get live access to our member centre on the link beneath this video and get a risk-free 60-day trial. Right, now we're going to go to the charts. We'll start with Euro USD and the COT Net Traders positions.
The COT Net Traders before we go and draw some levels. And in terms of COT Net Traders, obviously we're looking at what the large speculators doing against the commercials, the smart money hedgers, and it's interesting how this chart is evolving because it points, in my view, to a big break to the downside. Now, what I just want to go to first of all is this arrow here, which is A. This is where speculators build up to a record net long. Commercials drop against them. Prices peak out, okay? They shed some longs. Then we get B. They step up the speculators. That drives that rally, okay? So B, which is smaller than A, then look what happens. We come up on C. That drove that rally. We're nearly at a record net long again, and yet the price is failing to move aggressively higher. In fact, we've come off. So what does that tell us? It tells us basically that the euro is running out of upside momentum and that what we're going to see is a breakdown, okay? There just isn't now enough speculative buying power to take us to new highs. Volatility has dropped. For us, the euro is on the verge of a major break to the downside. So let's go and draw some levels of entry. We are on the Euro USD chart. I'm just going to draw my levels in a moment, but I just want to draw your attention to this, okay? Why the specs are so long, the euro, and the smart money's gone so short against them, okay? Because what we're looking for here is the specs to exit longs, and that's going to cause a big fall in the euro. So why will the specs exit? Well, they've all, built up a massive position long, based upon the idea that stimulus reduction in the Eurozone will be quick, it'll end by September, okay? But the facts don't point to that now. Inflation on Friday was weak. It moved down to 1.1% from 1.3% in January. Early estimate, or the forecast, was 1.2%. Now keep in mind, the ECB want to see 2% inflation. It's going backwards, not forwards. So stimulus reductions could be slower than the market expects. The central bank, the ECB, have already warned the market of this, and the market just isn't paying any attention. This often happens when the bullish fundamentals peak, okay? Also, market on the other side, very bearish of the USD. But if you look at interest rate differentials, they favour the USD now and going forward. Stimulus reduction is going to be slow in Eurozone, so rates won't be going up quickly, okay? And in the US, rates will probably go up quicker than the market expects. The Fed keeps saying they're probably going to do 4 rate hikes. Market just simply doesn't believe them. But if you look at the data, it points to more rate hikes for the USD. Now, last point. Goldman Sachs said on Wednesday it continues to accept broad weakness in the US dollar amid investors' concerns about escalating trade tension. Okay, so they're calling for a weaker dollar. They were wrong about the yen at the start of the year. They're going to be wrong about the dollar in our view. And when they say trade wars will weaken the US dollar, they won't. They'll strengthen the US dollar. History tells you that, because risk off benefits the USD. So what you've got to think about when you're looking at this chart is, what more good news is there for the euro coming? None. Okay, speculators still heavily long though, so they're going to have to exit the market in our view. Now, in terms of the way we've been playing this trade, this here, we do not think this level will be taken out. It's basically 125. This is where you had the record net long here. Okay, you see it went off a bit and then came back with the speculators buying. Can't force it through 125. We then see the speculators shed longs, then they rally it back up. B, this level here, 124, they can't push through. Comes down here, they try again, build up net longs, but there's just no momentum behind this now. They've run out of the speculative buying power. If we take those fundamentals into account, what we just looked at, we know that basically, the speculators, there's just no reason for them to really come in hard anymore. And you got the hedgers going against them, which means the rallies are shallower. Now, in terms of the way we've been playing this trade, we basically hit it here, 123.60. We had to cover down here for about 160 pips. Not a big profit at all. When we rally up here and come off, we've hit it again. So coming at 123.60. So what you've got effectively is, we're coming off. We haven't come off much. Okay, we're 123.60, 122.87. It's not a big profit at all. It's about 70 pips, so very minor. But from our perspective now, we should go lower. Yeah, specs have run out of buying power. They're going to exit the market. So I would say now, rallies back to this level of selling opportunities, stop back behind these two tails. Okay, that's what we've done. And then we're going to come and target this level. This, in my view, will be the key level. Because you can see what we've got. Sorry if I could draw my line straight. Sorry, I've got a problem with my mouse. Hold on. Where are we? There we go. You see what we've done is we've basically consolidated sideways. Once we break this level, the stops are going to be underneath. Okay? So in terms of what you could do with this one, you could sell a rally, or you can wait and sell a breakdown. Okay? Where are we going to go? Well, easily go to this level. Okay? And really, I'm looking for 116 on the downside. This is just based around how big the speculative net long position is. Okay? When the fundamentals of the speculators see them in favour of the USD, which we think they will, it'll go lower than 116. So if you're coming in through this 122 level, say I would come in at 121.70, where would you put your stop? Well, you don't need it back there. Once she comes through this level, I'd be back behind the 123 level. Okay, so this mid 20-day moving average will come down. That should then provide resistance, and you have your stop back behind 123. So basically you've got near enough 3-to-1 to here, 6-to-1 in terms of risk to reward to 116. If what we say or what we're thinking here comes to fruition, we think it will. For us, it's a very similar scenario to what happened, with the yen. Market very bearish of the yen. What does the yen do? Just turns around and has significant strength. The market is caught out. Speculators are caught out. Specs are going to get caught out here in our view. So we shall see. Obviously, we track this daily in the member centre, so we can change our view. But at the moment, as I do this video, pretty bearish of Euro USD. Let's move to Euro JPY. We are on the chart of Euro JPY. Just got the COT net traders positions up here. There are actually no COT net traders positions for the crosses, but you can easily create them yourself by just working out what the groups have got in both of the major pairs that make up the cross. So Euro USD, USD JPY, and then you can get a ratio. Well, that's what we do, and this is the ratio. Speculators 5.4 to 1 in terms of their long positions over their shorts. So bullish, very bullish. Commercials 3.4 to 1 in terms of shorts over longs. So bearish, going against the speculators. Divergence between groups 8.8. Now regular viewers will know we like a divergence above 10 to indicate a trend change, okay? And we'll go with the commercials normally. This is a divergence of 8.8. It's less than 10 because the trend is in motion. We normally look to see how much the divergence drops to alert us to, if there's going to be a trend change. Obviously, the euro going down. Is there going to be a trend change? Not on that divergence, okay? Now, I just want to go through how we got into this trade and how further we got to run on the downside. And it's around 600 pips at least in our view. Now, in terms of alerting us to the trade, it was when the divergence got plus 15 up at this 136 level. You can see prices, jigging around trying to get higher. Then we break out, okay? We actually thought, this is going to be a failed breakout because these groups will just go against each other. So we decided to come in through the two blue bodies, okay? So here, comes straight through. That'll trigger a short at 136.50, and we take out the 20-day moving average. When prices get volatile and a trend is about to develop, you look for the 20-day moving average to hold rallies. Now, we do come back up and get above it, but not really convincing for us. We don't see it going through 136. This tail gets through that tail, comes down. This red cements the downtrend for us. We go down to 130. We basically just trailed our stop, came out at 131.50. So we'll pick up, 500 pips from that move down. But what we want to do is get back in. And we're looking, for prices to basically get to the 20-day moving average and fail. And the way we did it was basically, I need to draw my line. Where are we? Here we go. Round numbers very important. And you got 20-day moving average. Our view was when we got up here, we will not hold above 132. So we'll just come back in through the 20-day moving average. You can see we've moved away. So we come in at 131.50. We're now down at 130.27. So we've got 120 pips, which is a minor profit, okay? We're looking for a lot more. So I think now, I'll just draw a quick trajectory line. There. Sorry, I haven't got it quite right. It needs to be through that body. Okay, so what we've got now is this level here. These two candle bodies and the 20 should hold. If we get above 132, we won't get through it in our view. Our stop is back behind this tail, well back. We're now looking for more downsides. You can obviously sell a rally, but you can also sell a break lower. It's got another round number here. See the round number, there's always lots of orders around them. And with the way the specs and commercials are still heavily against each other, we think this level will give way. So it'll offer an entry for new positions. I will come in at 129.70. That's my view at the moment. Well, that can change, obviously. Where are we going to go? We are going to go down, in my view, at least to 124. Okay, so plenty of downside if we break lower. If we break through this level, okay, I'm not worried about these tails now. We just break through this level, more stops are going to get hit, and you just trail your stop behind the 20-day moving average. So you can get a 3-to-1 risk reward if it all goes to plan, so to speak, if we get down to 124. And the beauty of the COT net traders is it alerts you to big trends, and it gives you the courage to hold them. You can't make projections just from technicals, okay? You need to measure the sentiment behind the chart and what the big players are doing. And we can see from the COT, this has got more downside. Also, interestingly, this move off 124 initially on the euro that went all the way up to here, that was all based around quick stimulus reduction from the ECB. We've already said we think that's now not going to happen. You've already seen some downside. in terms of the yen on the other side, yen fundamentals just out and out bullish. Economy doing well. They're going to be reducing their stimulus soon. So that could trigger not just a move down to 124 in Euro JPY, could be down to 120, even 110. Yeah, so Japan or the Japanese fundamentals are looking bullish, and I'll see got the potential for risk off. Japan or Japanese yen, #1 safe haven currency. So that's how we're seeing the Euro JPY at the moment. So far this year, it's treated us well. And although we've got really good profits from it, we expect more. We're looking to see if the Euro USD can do a similar move to the yen. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.